And we're live. Welcome, everybody, to DCA, dollar cost average, as the show talks about. Well, again, we've got the all-star lineup. Ben, Into the Cryptoverse. Ben, thanks for showing up. And James from InvestAnswers. Gentlemen, thanks for coming on yet again.
Yes.
So I know it's a little bit slower. This is what we're going over, everybody. First of all, thanks everybody for showing up. There's 5 questions we want to go over today. So the first thing is the TA battles. What level of support needs to hold, especially as the market has been just taking a monstrous cliff dive lately? And what's the best worst case scenario if we do break whatever it is that these gentlemen call? Second one, I want to talk about how Jerome Powell, Federal Reserve Chairman, has had some dovish remarks at the press conference, yet the markets are bearish. What the heck's going on, especially with the GDP coming up and then the earnings report coming out, and some of these companies actually pretty well, but it still took a big dive. Third, we'll talk about U.S. and Russia announced regulation intentions, and who wins here? And does the crypto investor win? That's the big question. And then next to last, I want to talk about texts from friends. I've been getting texts madly from friends and acquaintances asking me what they should do in this market. So I don't give investment advice to anybody here on YouTube, but I give investment advice somewhat to some of my friends. So I'm just going to ask you guys what you can do. And then lastly, what turns the markets bullish? Those are the 5 questions. And of course, we've got Ben from James from InvestAnswers, and we've got Ben Into the Cryptoverse, like we talked about there. And there's a link in the description. You can find their channels right in that link. So let's get to it, shall we? Gents, here's the first question. I'm going to start with Ben because he's pretty good at that. The question is, what level of support needs to hold, Ben? I don't do TA, so I rely on you and your daily shows.
Look, I mean, as we've said for the last few weeks, right? The bottom, of course, is anyone's guess. The levels that need to hold, where are we now? It was 50K, then 40K, then now we're sitting at what, 37,000? One of the things that I typically think of in downtrends is not what support needs to hold, but what resistance do we need to take out? Because as long as the downtrend remains intact, it's generally safe to assume we will, just continue moving down. I think that the main levels to look at, of course, would be the same levels we were back in the summer. Like the 29K, 30K. We not only were there in the summer, we were also there in January of 2021 as well. So that seems to be a pretty big area. In terms of like the kind of the flip of that question, like the resistance that we need to take out before we the downtrend head back the other way, some of the main levels are clearly that level we just dropped from, right? Like the 40 to 42K level, then you have the 46K, then the 53K, then the 60K, and then
yes.
I mean, it goes all the way up. So there certainly is a mountain to climb ahead of us. I think what I normally do in downtrends like this is I personally think it's foolish to call the bottom because we know what happens, right? Like if we keep trying to call the bottom every single week, we can easily be proven wrong the next week if we get another sell-off. And a lot of it, I think, depends on what the stocks are doing. If we're seeing the NASDAQ sell off week after week, how can we expect crypto to hold up? I would generally say, I mean, look, the 29 to 30K is certainly an area we would like to hold. But I also wouldn't consider that the worst case scenario. Like worst case scenario is obviously we could go below those levels. So look, right now I'm more so focused on can we change the downtrend and take out some of the resistance levels, and then we're actually putting up a fight. Until then, it's really hard to call a bottom.
Ugh. Well, that is the honest answer. I appreciate that because let's be honest, everybody. Out there in crypto land, YouTube world, we're going to see a lot of people go, you know what? This is the bottom. Then all of a sudden the bottom gets broken. Okay, now this is the bottom. Okay, that wasn't right. Now this is the bottom. So just hold on because nobody knows, no one has a crystal ball. James, how you feeling?
So adding on to what Ben just said, I think we need to look at not necessarily TA, but we need to look at kind of, I always say, follow the money, look at the money flow, look at the under or over supply of coins. And there's a couple of things that are happening. One, we've seen about $1 billion of selling pressure every day for the last month.
Yes.
It's not too dissimilar to what we saw in September, but it is different in December and January. We kind of sold off in December and sold off hard again in January. It's like we collapsed through what I call the steps, the support levels. Now, taking that into account, we're getting to the stage where you see that the sellers are beginning to hopefully capitulate. But what I'm more concerned about right now is some of the miners have begun to sell because they are in a arms race to get mining equipment, and we're running out of semiconductors for mining equipment. So it's like, I know Bitcoin's going higher, but I need those rigs like CleanSpark's mining 10 Bitcoin a day with 2 exahash. If I can add another exahash, I can send the 5 Bitcoin a day, and if Bitcoin goes to 100K, it's a lot of money. So this is what they're dabbling with right now. So I'm worried about that selling pressure. I'm worried about the low volume. That being said, when you look at the TA, anytime we got close to 33K, the volume spiked, the green buyers were in. And that was very, very clear to see, which is good. So I think we just need more volume. We need the sellers to capitulate. We're real close. If we look at the timeframes for this capitulation window to happen, it's always 55 to 60 days. And we have what? Using that same type of box, we're close to the end.
Okay.
So that's what I see now. A final thought, 33K seems to be a very solid floor, but with a big sell-off, a big cascading set of losses, we could wick down to 29K where we were in the summertime last year. But that would very quickly be bought up. So I see 33K as a good time slot. But again, for everybody out there in the audience, just zoom out. Think long-term. Don't let this short-term action over 4 weeks, 6 weeks, 8 weeks put you off. There's so much talk of 8 years from now of where Bitcoin's going to be. And also think of the network effect that has not slowed down. We're going to go from 150 to 250 million users this year to at least 750 to 1 billion crypto users. It's coming, and you cannot deny the network effects. That will have an impact on price, and that will bring in a lot more buying pressure, which will far overcome the selling pressure. So that's the way I see the world right now.
That's a pretty good way to say it. No, that was a great one. I mean, both of you guys, it was a great analogy, or to take a look at what's going on. I mean, even Russia and America are coming together and go, you know what, this is moving so fast, we have to regulate it. And we'll talk to that in a little bit. So let's move on to our second one. The question is, and this is what got me. We were all expecting Jerome Powell to come out, the Fed Reserve Chair, and just to really lambast and just say, look, we're going to start to add on these points. We're going to start to taper and make things come down. I know, James, you were like, no, he's not going to do it. And he's certainly not going to do it 3, 4, 5, 6, 7 times. But he did come out and really just said, hey, looks like we're going to push everything to March for the next Federal Reserve meeting. So I'm going to go back to James again. James, what happened here? Because Jerome Powell's dovish, it would seem like the markets would be like, okay, that's cool, that's great. But it was the exact opposite. Everything turns bearish. Even so, earnings reports came up and they were still solid.
Okay, well, let me describe what markets hate. They hate high interest rates. They hate inflation. They hate unemployment. They hate lack of economic growth. But what they hate most is uncertainty. So what JP did, Jerome Powell, can you hear me okay? What JP did was he threw us, 2 months worth of uncertainty where we don't know which way is up. And stock markets freaking hate that. And this is the problem we have right now. We are in limbo. And that's why I'm kind of going to be very cautious. If things get completely oversold, you see many, many top names completely oversold over the most amazing earnings news ever. And that's just a reflection of the market, because the market doesn't know which way it's going, especially with high frequency traders that are in there just for a quick win. But again, if you have a long-term time horizon, this is a great opportunity to, again, stack more sats. One of the mistakes I made during summer, June 22nd, was not buying more Bitcoin. Yes, it fell to 29K. I bought some, but I was thinking, I remember shooting to whatever 68 twice after that. I was like, I should have got more. But now is another opportunity that we have. So again, markets hate uncertainty, and Jerome Powell is a political player. He works for the boss, the president of the United States. And he doesn't want any boats being rocked ahead of the midterm elections, which are 260 days out. That goes out to the 8th of November, 2022. And that's the world we live in right now. So limbo, choppy waters for the next 8 weeks.
Gotcha. I got to do something. Ben, what do you think? I mean, adding on to that, if you think Jerome would have came out and just said, okay, we're going to raise rates by, a quarter, half, somewhere around there. Do you think it would have been better? Or do you think like this is just what James talks about? Uncertainty is awful for the markets.
I think it's all about uncertainty. When I first listened to it, he didn't really say much of anything, to be completely honest, right? If you think about it, like he didn't say much of what we didn't already know. But he didn't give a clear direction on exactly what was going to happen. And he just kept going back to this idea, well, we haven't really talked about that yet. Like, we'll talk about it at the next meeting, right? And now you have all these big banks coming out. Some of them are saying that they're expecting 6 or 7 interest rate hikes this year. I think there's a lot of uncertainty in, is it going to be 4 interest rate hikes? Is it going to be 3? Is it going to be 6? There's some level where I think the stock market is pricing in the probability of the Fed completely screwing up and potentially sending us into a recession. I'm not saying we're heading that direction, but there's always these probabilities of people are sort of like weighing things in. And because there's that uncertainty and we still don't know exactly what's going to happen, I think you're seeing the markets sort of react to that. I think it'd be nice if by March they give us a more clear direction on what they're going to do. Rather than leaving us in the dark, because as James said, right, it's all about uncertainty. Markets absolutely hate it. And by the way, all these things should theoretically be priced in. Like, once you know what's going to happen, it is basically priced in immediately. The problem is we don't know what's going to happen. I think investors are now pricing in 5 interest rate hikes, if I'm not mistaken. Last time I looked. But yeah, I think it all comes back down to uncertainty and hoping that essentially the Fed doesn't tighten too much, because you don't really want to see a repeat of some of the major pullbacks we've had in the past. You'd like for them to hopefully learn from their mistakes and keep things afloat.
Yeah, let's hope so. You know what? I'll do a follow-up question real quick. So when you talked about that, you said it's already priced in. I keep hearing that same tone as well from not just you, but a bunch of different analysts. So real quick, Ben and James, I'll ask Ben first. Is this priced in? Because I see a lot of things moving a little bit sideways, a little bit choppy, and not going in one direction, one way or the other, drastically. So already priced in for 3-4 hike rates, or do you think we can go down farther?
I think a lot of that's already priced in. I think a lot of the uncertain, like the major sell-off recently. Look at tech stocks; they've just gotten hammered one day after another. And if you overlay the NASDAQ with crypto, they're not always correlated, but over the last 3 months, they've been incredibly correlated. Note that every time crypto has gone through a peak or a massive peak, it's always when the NASDAQ's trending higher. So just going back to crypto, we want to make sure the NASDAQ's doing well before we can really expect crypto to do a whole lot. So yeah, I think that the market is pricing in several interest rate hikes. I also think they're pricing in, the probability of the Fed going too far, doing more than they need to do. So, if later this year, if let's say the Fed doesn't overstep and they keep things within reason, then that could lead to a quicker recovery. But right now, I think what you're seeing is a lot of panic. You're seeing people, wonder if we're heading into a multi-year recession, and if over the next few months, the Fed doesn't really overstep what they really should be doing, then I think you can see a lot of that uncertainty go away, and hopefully markets get back on track.
Let's hope so. James, real quick, I'll ask you the same thing. Priced in or not, man?
Yeah, it's priced in for at least 2 hikes, call it 50 to 75 basis points. More than that, no. But you got to look at the big picture. The more they raise interest rates, the more their deficit grows because of the funding liability of the debt that they have, which far exceeds GDP. So they're boxed in. They can't shoot themselves in the foot. It's that simple. It's math. And I've done a ton of videos talking about this stuff. So they know where they got to go. And that is not too far up. We are now in this MMT world where interest rates have to be perpetually very, very low.
Modern monetary theory. We'll see if it all plays out, and let's see if it actually works. All right, let's move on. This is the next question. I thought this was fascinating. U.S. and Russia, around the same time, announced their regulation intentions. I know we've heard about this in the past, and it gets a little bit cumbersome, but there's a couple different things that did come out, and one of those looks something like this. So we had Russian authorities come out and said, hey, we just drew up a roadmap to regulate cryptocurrencies. I found it fascinating that they actually did this after their Russian central bank said, we need to ban everything. And then lawmakers came down and said, grab some bench because that's not your job. That's our job. So we'll do that. Then Putin came out and said, you know what? Let's regulate cryptocurrencies and not ban them on almost the same time frame. We had Joe Biden and his administration come out and say we need to do crypto regulation as a matter of national security, and they're going to do that over a little bit more time frame. So my question to you guys is, and I'll ask this to you, James, first, who wins here? And who's going to be the big loser? Is it going to be the nations? Is it going to be the crypto investor, or somewhere in between?
Well, this is a question I didn't really think or see coming, but I spend a lot of time analyzing geopolitics, political leaders, global macro situation. But this is a perfect game theory example of what's going on. And I want to bring up a very old parable that is the enemy of my enemy is my friend.
That's right.
And Bitcoin is the enemy of now the old school politicians, the Fed, the US, the IMF, the ECB, whatever you want to, that's kind of the enemy. And Putin, his favorite job in the whole world is to wreak havoc on elections, on governments, on political stability. It's just that's his pleasure. You know, he sits at home thinking at night in three-dimensional chess. How can I mess with the world some more? So obviously he believes maybe potential for a petro Bitcoin. He's hinted at that many times last year and once this year. And havoc is fun for him. Now, Biden and Trump both have a strong dislike for Bitcoin. Okay, so they're very aligned there. But what's interesting, throw a spanner in the works. Did you know that Biden's biggest donor is a guy called Sam Bankman-Fried?
This is true. I've heard about that guy. That guy.
So, and Biden during his whole career was funded by the Delaware Financial Services business. All the big banks that are headquartered in Delaware, a low tax environment, all the credit card companies. So he's tight with Wall Street. And that's where I get kind of twisted up because Janet Yellen got paid, what was it, $7 million last year by all the top banks. Yeah. You know, we're talking Citadel, Citibank, Goldman Sachs, Bank of America, Barclays, JP Morgan, BNP, Credit Suisse. Just give you the money and I'll give you some political power. And so I think that's what's happening behind the scene. So you got this weird situation. We got Putin trying to mess with the world, as he does. And you got the US trying to curtail and control and line the pockets of the people that put them in their office in the first place. Who's going to win? I don't know. Now, I'm praying and I hope that things like true decentralization will just make this stuff more popular. Like when Nigeria bans Bitcoin, it just explodes in popularity. So fingers crossed.
We'll see. We will see. All right. I don't know. Ben, what do you think about all this? Because there's a lot of, this is chess. This is chess on a grand scale. Who is going to make the best move and who's going to just be the ultimate loser out here? And really, can you even tell?
I mean, look, we're going through uncertain times with Russia. Seeing them sort of take a step back on the idea of banning it, and now they're talking about regulating it. The first thing that I was thinking about when they said that was, is this some type of, like, as you said, like, is this some type of like chess move where, they're talking about sanctioning Russia, sanctioning Putin because of some of the political events going on in the world and the Ukraine. Is this his way to say, well, we're gonna actually go talk about crypto, and is that are they trying to undermine maybe the U.S. dollar as the reserve currency? I mean, not that I think it necessarily would, but you have to think that if the United States is going to make some of these claims, then they might find other alternatives, and one of those could in fact be cryptocurrency. And I think Putin was actually, correct me if I'm wrong, but I think he was actually on the record talking about mining being in a positive sense, and then wanting to really explore that. So I think that to get people talking about it, like sort of the idea of like any publicity is good publicity. But look, I think in the United States anyways, like we need some type of, we're going to have some type of regulation, right? I mean,
right.
We're sort of in this weird spot where you have a futures ETF, but you don't have a spot ETF. We're in this spot where if you're a company and you want to innovate in crypto, there's a lot of regulatory uncertainty if you're living in the United States.
Mhm.
So I think it all comes back to, I think I would prefer to be optimistic and say that I think regulation will ultimately be a good thing. But with some of the bills that I also see introduced to Congress, I have to sometimes wonder, like, do these guys even know what it is they're trying to regulate? You know,
Exactly.
and
Yeah.
if they don't understand what it is, like if they can't even answer the question about like what it is they're trying to regulate, then I worry about their ability to actually regulate it.
Yeah, well, it's actually a good thing, Ben, that piece you pointed out. The fact that they don't know what they're regulating torpedoes the legislation out of the gate, which is a good thing.
Yeah, well, we'll see. I mean, I can totally understand why. You know, I never thought of it that way. The way that Ben just brought up about how Putin would like to undermine the dollar, which makes a lot of sense because Russia and China would really love to do that because the dollar is the world reserve currency. So I can definitely see that. I can see why they'd want to do it on their end, and I can definitely see why America would want to do that because there's a lot of money to be made. And just the way that we took the lead in the early '90s with that Law 230 to get for the websites or the internet to actually come forth and actually allow them to flourish and not hinder, I think it could work out. The problem is just like what Ben said again, do they even know what they're regulating? Because with America competes, we're competing against ourselves. So we will see. I think that regulation has to happen. I'm waiting for it. And a little bit of regulation goes a long way. We'll see what happens with Gary Gensler. All right. So there is that. And then next to last, this is the advice column. And on this channel, there's no investment advice, only investment opinion. James has his opinion. Ben has his opinion. I have my opinion. But when your friends are texting you, and I guarantee they're texting you over the last month or so, if they've bought any kind of crypto or digital assets or are trying to get into it, what do you tell them? First of all, when they bought, if you have any friends that have actually bought into it beforehand, what do you tell them right now as far as what's going on in the market? Because, I mean, maybe some of them are up massively. Maybe some of them are underwater. So what do you tell them? James, I'll start with you.
Well, first of all, shed the losers. Have high quality names in your bag. I don't care if they are equities or crypto. Make sure they are the winning names. The other important thing is always have some cash on hand. That's proven to be very, very important right now. So that's always critical, no matter where the market is, but especially in times like this with so much uncertainty. The third thing is, pick few, because the investing game, the more deep you are in what you invest in, the better you can manage your exposure. But I proved to myself, I was very disciplined about not holding more than 10 cryptos and 10 stocks. That's even too much. And I do this 18 hours a day. So it's just way, way, way too much. So my New Year's resolution is less is more. Do a lot of work up front, identify the winners, and go into those high conviction names. Take maybe 3 stocks, take maybe 3 cryptos, and just go in hard. If one of the cryptos blows up, you're okay. The other 2 out of 3 hopefully will do very well to make up for that loss. And remember as well, I know, Ben, you say words to this effect sometimes, but it is very true that millionaires are made in bear markets. Get in early, get in hard, get in low. Real simple. So that's the advice. And people are very rattled right now, but just, it's like 6 weeks is nothing in the scheme of where this whole space is going. Like I'm going to do something tomorrow. I'm digging into some numbers where how big money is coming and the impact that'll have on price over the next 25 years. Price of everything is going to go crazy. And then, so yeah, that's just my 2 cents. Zoom out, everybody. Future's bright.
Ben, what do you got? What's the advice for your family, friends, and loved ones when they're like, Ben, you told me it was gonna go great. Now I want to speak to a manager. So what's going on?
Speak to a manager.
Yeah. I mean, a lot of what James said is true. I do think this is a time to consolidate portfolios. You have to remember that a lot of altcoins, not all of them, but a lot of them will not see new all-time highs ever again. I know that's sort of like a painful thing to hear.
It's true.
But yeah, I mean, like if you've lived through prior phases like this, you know that it's true, right? A lot of the big ones will ultimately trend higher. And your safest, I mean, you're clearly your safest plays are Bitcoin and Ethereum. So I tell people if they're looking to get into the market, you have to start with Bitcoin and Ethereum. You can't. It's hard to start anywhere else, because the one thing we do know is that if the market is to recover, which I do think it will recover eventually. I don't know exactly the time frame on that, but Bitcoin will often lead that recovery, right? It's going to be hard to have a healthy market in general without having a healthy Bitcoin. So I think that consolidating your portfolio down to, to a few coins makes sense. And it doesn't mean that all those coins can't recover. It's just that, of course, when we're in uncertainty, look at all the coins from 2017, 2018 that came not even, a small fraction of their prior all-time highs. There's so many coins that did that. And so I think the same thing could be said today. Make sure the projects that you hold, you actually believe in, and it wasn't just like a cool ticker sounding name, or you heard it shilled somewhere. you thought it was a cool thing. Just make sure you know what it is you are buying, and then furthermore, have the right time frame. The right time frame in crypto is generally a multi-year time frame. In any given single year, or even say like a 3 or 6 month period, it's a wash. Like, we really don't know what's going to happen. What we do know is that the asset class as a whole does. It generally trends higher with time. So you need to have a long-term investment mindset. And if you don't, which is not necessarily a bad thing, if you don't, then maybe this is just not the right asset class for you. I don't know. It's one of those things where you either can take a step back and look at it as a multi-year thing. And if you can, then I think you're going to be much better off. If you can't, then you have to be honest with yourself and say you just can't handle the volatility.
Yeah, no, it's right. And then like just what you said, like some of these cryptos are not going to come back. They just aren't. And we talked about this a couple of days ago. There was an example I gave. I called it a dash of salt. And I'm not going to pick on any project. I mean, kinda I am. There's one called Dash. And Dash it was great in 2017. It went up to like $14, $15. And then it flatlined all the way until today. I think it's still in the top 100, I believe, but it hasn't really done much whatsoever. So if you held that the whole time, where would you be right now? Well, not too far. And then I also talked about Salt. Salt was going to be this great lending platform. It went all the way up. There was different problems with the management team. SEC came in, shook them down, essentially, just like with Ripple and XRP. And they have been flat the whole time. So a dash of salt, remember those cryptos, because at some point, you're not going to be able to come back. Blue chips, this is what I told my friend George today, matter of fact. He has been investing since early 2017. He had the basics. He had Bitcoin, Ethereum, Chainlink. And I would tell him, George, I can give George financial advice because he's just a friend of mine. I like, look, man, you got to take some profits along the way. And he was buying it like at 6,000, 7,000. Then it went up to 12, then 20, 30, 40, 69,000. Like, George, you've got to take some profits at this point. Nope, I know where it's going. And okay. And now here we are. And then today's like, hey, man, what should I do? This is going to be an unpopular opinion, but I'm going to tell you right now. I said, George, we don't know where things are going right now. Do you need the money for something? He's like, I need the money for this specific thing. I said, if you need this money for this specific health thing, you need the cash, then go into cash. I'm not telling him to do everything, but if you need the money at this point, then go for it. But for me, like, I've already done my stuff. And I just say, like, right now would not be the greatest time to sell. But if you had bought at 3-5K, it's still at what, 37K? So it is what it is. Diamond hand nonsense is not the thing. No one wants to be the most, the richest corpse in the graveyard. All right. So
there was one thing I did forget to say, Rob, I can share with your audience is, and I see a lot of this right now in the chat, in the comment, in the people out there, in the tribalism. The number one way to lose in investing, everybody, is to be emotional. If you are in any way emotional, you will lose. 95% guaranteed, you will lose. 5% will get lucky, 95% will lose. So when you invest, remove all emotion from the equation. I'll just leave that there.
Try to do that. Unless the one time it did work out for me, I remember when Elon Musk tweeted he was going to stop accepting Bitcoin, and I had been to a birthday party that day before, the night of, and I was a little tipsy, and I go, this jerk, and I started buying. I bought a ton of stuff, and the next day it went up like 10%. I'm like, that worked out pretty well.
Okay.
That's not investment advice. That's just a offshot. All right.
Do not trade trips tipsy. That's not a good thing.
Yeah, don't do what Rob does. Rob's a moron sometimes. All right. So lastly, and we'll get out of here, we'll do this little Q&A. What turns the markets bullish? Because it seems like we just had, earnings reports come out. Microsoft did amazingly well. There's some issues with Tesla. The GDP came out and said it was actually above than what they had actually predicted. And what happens? Markets go down. It seems like no news, good news, bad news, doesn't matter. Everything's going down. So what is going to turn the markets bullish? And I'll start with Ben.
I think a lot of people are just looking for a little bit more clarity from the Fed, and how they're going to handle inflation. And obviously, part of the inflation isn't necessarily monetary. A good part of it, I'm sure, is monetary policy. It's also, I think, related. It could be related to supply chain issues as well, which their monetary policy isn't necessarily going to fix. I think some of the things that could turn things around would be a little bit more clarity on what the Fed's going to do. So maybe they'll give us that in the March meeting. I do think it always remains prudent to be cautious, especially when we're facing a lot of uncertainty. There are, of course, other things. Sometimes I think to myself, you still have a lot of bullish things happening in the space, right? You still have a country buying the dip, right? You still have MicroStrategy that they regularly purchase Bitcoin. You still have, Tesla still owns, a lot of Bitcoin themselves. They purchased $1.5 billion, and as far as I know, I think they only ever sold 10%. Correct. You have on Twitter, you have Wendy's, McDonald's, and Burger King all talking about crypto. Their primary accounts. And I know the whole spot ETF thing is this meme at this point, because we've been waiting for it for, I don't know, since like 2016, 2017. It's not here. Maybe that could turn things around, but we're not going to get that until there is some more regulatory certainty. So I think, if there is more regulatory certainty, if we have a little bit more, a better idea of what the Fed's going to do, and probably one of the most important things is the stock market doing well? And until I see the stock market recover and start to trend back up, I cannot think that the Bitcoin's going to immediately go make a new high. I need to see stocks doing well. You think about it, like Bitcoin is operating right now as a more volatile version of, say, like the NASDAQ. Like Bitcoin took out its September lows before the NASDAQ did, and now the NASDAQ, I think, is hanging out right around the September lows. So like there's a lot of things that could happen over the next few months. I think we just need to be patient. And one thing that's worth mentioning in terms of being oversold right now, we are incredibly oversold on multiple timeframes. Even if you look at like the weekly time frame for Bitcoin, the last time we were this oversold, I believe, was like March of 2020. And then the time before that, when we were this oversold in the weekly time frame, was 2018, but not the beginning of 2018. The November of 2018 was the last time we were this oversold on the weekly time frame. So I'd like to think there certainly is some more. There can always be more downside in the short term, right? We really just don't know. But if people could just hang in there and just take a step back, there is bullish things happening in the space. It's just a matter of getting past some of the short-term uncertainty.
Yeah, I don't know if you guys heard, James, I'll get to you, but Arizona just put the language of a new bill to make legal tender, Bitcoin legal tender in Arizona. I don't think it's going to pass, but who knows?
Texas too. Texas is trying to do the same thing. Well,
of course, it's Texas, baby. All right. So, James, what do we got? What do you?
Yeah, I still, I remain so bullish because of the pure scarcity of things like Bitcoin. It's just insanity, and the adoption, as I started at the beginning talking about the network effect, that is not slowing down. That's just accelerating all over the world, all at the same time. And when you have people, I don't know if you guys saw Google Trends yesterday, hit an all-time new high for Bitcoin. Okay. And that's what when people like Putin mention the word Bitcoin, the world goes, what's that? Those that don't know what it is. And remember, only 2.5% of the planet have adopted it. So again, what I'm looking for, one of the things I'd love to see, it might be a big stretch, but is that decorrelated nature of Bitcoin to becoming more risk off, to become a true digital gold narrative. So That's what I'm looking for, and I think that's possible. I also think now a lot of the big tech names are very oversold. They are below what they were a year ago. So 2021, a bumper year, the stock market completely oversold. Not just Bitcoin back to 2018 levels, but you look at the Teslas of the world, the Amazons, etc. Big rock solid names oversold. So I think that's going to turn around.
Yeah.
There will be that 8 weeks of dark cloud, which is going to keep a lid on things. And I think Bitcoin was probably going to do over the next 8 weeks. It's going to bump up against 42K. It's going to have a hard time breaking through that level right now, unless we see big buyer coming in or a big sovereign coming in and buying. That will change the game. But it should happen in Q1. It was supposed to happen from things I've heard. But maybe with this weakness, there are high net worth individuals and family offices. They are buying at 33K. Every time it gets close, whoosh, no matter what time of day, they come in and they buy. And that's just visible from all the volume indicators in the charts. So the money's there. They're just patient.
Hey, man, I hope so. It does concern me what you said, though, about the Bitcoin miners selling off because they have to with the chips and things like that. But we'll see. I will say, just like what Ben and you talked about, clarity. Imagine if Jerome Powell comes out, gives us crystal clear clarity what they want to do. And then also the U.S. government comes out and says, here's what we came about. This is what the CFTC, the OCC, and the SEC has come together with. We're going to give clarity for rules for regulation as far as crypto. You put those two things together, everything takes off. But that's why regulation, clarity is good. All right. So look, another great episode. I want to thank these two gentlemen, and we'll do a little Q&A real quick. So James, Ben, thanks for talking me off a ledge. Honestly. Okay. I had some things stars. Let's see if I can show this. Thanks. Bid Moon, I just starred this comic. I thought it was pretty good. 3 icons. Well, these two guys are. I love it. Let's see what else we got. Comments. Michael. This is a question. Why is Bitcoin this volatile? Since it's considered a store of value by many and money seems to currently flow towards commodities such as gold and silver. And I just heard a news report from CNBC. I think it was Goldman Sachs. One of their CIOs talked about how this could be a commodity super cycle. So what do you think? Why is this? I mean, we talked about it at length, but this store of value narrative, do you still think Bitcoin's a store of value?
Absolutely.
I mean, it depends. Yeah.
Oh, sorry. Ben, let me go first.
Yeah, I think it is a store of value. I think you just have to have the right time horizon. We're in the process of watching Bitcoin grow up, right? Like it's currently being capitalized. Gold, this happened a long time ago. So I do think it is a store of value as long as you have the right time horizon. You can't expect something to go up 20x and not have to, retrace some. Like that's just, it's what Bitcoin has always done. It's probably what it will continue to do. So I do think it is a store of value as long as you have the right time horizon. And I mean, gold and silver, yeah, like there is some money flowing that way. Additionally, gold and silver, I mean, gold hasn't, it hasn't really done a whole lot in the last 10 years. So you think about, it's basically the same price. It's basically at the same price it was when Bitcoin was first created. It's sort of like, I guess it depends on, what is your definition of a store of value specifically? I mean, gold just doesn't really do much of anything except over the last 10 years, lose value inflation. But I could see, with that said, as much as I give gold and silver a hard time, I do think they will probably push higher, at some point this decade. Gotcha.
Yeah, perfect. James, what do you got?
Yeah. So I do think it is a store of value. So the people that are investing today, they are looking with a long-term perspective. They have that perspective. They're not looking to speculate with all of their assets. The more assets you have, you got to become a lot more risk averse and focus much more on protection. But I think the penny is dropping right now. We're still so early, but the penny is beginning to drop that this is a top asset to be in. And I'll ask the audience, is there a better one for the next 10 years? The answer is, in terms of risk protection and alpha, which is excess returns, there's nothing better out there that I can find. And I'm always looking. So
that's a pretty good question to ask. Hey, if you don't want to put it into gold or silver or whatever else, what's your other option?
Yeah.
Would you put it into gold?
And to comment on what,
I'm going to do that. I'm going to steal that.
Sorry, and to comment on what Ben said, if you remove your loss of purchasing power for gold over the last 11 years, it's actually fallen 40%. So your 1811 years ago is a lot less than today.
Yeah, I can agree with that. Yeah. And then this isn't a question, but it's just something to remember. Look at Amazon at the early stage, dropping 80% was the norm. So just remember that if you would have gotten into Amazon early, I think it was like $1,000 or $100. The very IPO would have turned into like 21 million or something crazy like that. Next question. This is a question. Will the Fed keep printing money, or are they stopped? Because I keep hearing about not quantitative easing, but quantitative tightening. Since you're up there, James, what do you got for that?
Yeah, go to the nationaldebt.com website. Go to I think it's the Missouri Fed, and look at the charts. They're up and to the right for as long back as you can imagine, only now at a more accelerated pace. So the problem we have, again, it's real simple. The debt is about 1.31 times GDP. Okay, so they're underwater. Now, can they grow GDP fast enough to outpace the debt and debt servicing? No, it's beyond the tipping point. Tipping point 77%. They're nearly double that. So they have to keep on printing. They'll pretend, oh, let's taper a little bit. Let's reduce our balance sheet. But then once the proverbial hits the fan, they'll have to start printing again. And they'll have to start easing again. Again, long-term, low-interest environment with some undulations. But long-term, it can never go back to historical rates of 6, 8, 10%.
All right. So James thinks that they're going to keep printing. Ben, you think they're going to keep printing, or they're going to shut it off for a little bit?
I mean, they'll always have to keep printing. I think. I think what James, what the Fed says and what the Fed does has historically been two very different things. And I could easily see this thing where Powell talks the talk and they raise interest rates and whatnot. They go through that. And then if you can fast forward, say 6 months, if supply chain issues, if some of these things can be fixed, and if inflation comes back down, and you also have the pressure of the political parties in office that want the economy to be doing relatively well going into midterm elections, what choice do they have? Other than to, if the alternative is sending us into a recession, I can't imagine that they're going to want to do that. So I think they're going to have to keep printing money. Is what it's ultimately going to boil down to. But in the short term, I do think I think the Fed has to save face and at least show that they're trying to do something about inflation.
Yeah, I saw Max Kaiser on Stansberry Research. He said the same thing. He goes, "Why do you guys keep falling for that? It's like Lucy taking away the ball from Charlie Brown. They're always going to talk about it, and we're going to stop, and they don't stop." And then Ben, this is a question for you. Have you ever done stepwise regression modeling on crypto? I don't know what that's all about.
I've done a lot of different types of modeling on crypto. The main models that I use today are, you can easily do linear regression on crypto. That's pretty standard, and you can see that in terms of what Bitcoin's doing. You can easily model it with various regression models. Stepwise regression, I don't know if I've done that before on crypto. So I can't really say. Can't think of anything specific. But if they have any specific application in mind, I can always try it out.
See, look at that. Ben's always up for anything. James, you do models, stuff like that? Anything like that for you?
I do. I spend my life in spreadsheets. I don't want to bore you guys to death. I model everything, and I have done since I was a child. I grew up with my dad, and he had this old IBM XT. I'm dating myself, a floppy drive computer.
Holy smokes!
And he had the predecessor to spreadsheets, which is before Lotus 123. That nobody in this audience would even know what that is. So I was playing with spreadsheets from a very young age, and that's it. By the way, Bitcoin went up $551 since the stream started. So
I was watching that, but you also see the Nasdaq. The Nasdaq's rallying into the close, which is a change from what it has been doing for many days now. It's actually going up into the close.
Exactly. Wow. So it's all the good feelings out here in this audience.
Yeah, so maybe we'll finally have a good weekend for crypto.
Yeah, well, that's what I was saying. I said that yesterday. So the bears were clearly in control with their positions. So the the whales had to manipulate the price of Bitcoin to make sure it didn't breach 38K, or else they stood to lose about $130 million. So they won the game yesterday. And my theory was, okay, once we get past noon Eastern time, we should get way above 38K this weekend. Theoretically possible, but the whales will be there to dump. They'll wait for a low volume time.
This will be the test, though, is can we actually take out those overhead resistance levels on the way up? That'll be the real test. I mean, this is what we're all watching, right?
Yeah,
that's
but
it.
remember, if you saw, I think it was 2 days ago, it looked like a beautiful fake out after the Fed meeting. We went from 33.5 to 39K.
Yeah.
And
then they said,
once it hit about 37, 38, all the leverage longs go in hard, and then the whales liquidate them all.
Actually, there have been some whales accumulating recently. If you look at some of the on-chain data, some of them have finally started accumulating again. And I don't know if you guys follow whale number 3 on the Bitcoin rich list.
No,
but whoever that is, I've always wondered who that person is. But that person has been, put it this way, the last time they sold like 1 Bitcoin a while ago, but the last time they sold a significant amount of Bitcoin, they sold 1,500 Bitcoin. They sold it at 67K.
What?
1,500 Bitcoin at 67K. They also sold it like 50K and 60K as well.
Okay.
Like they didn't exactly time the top. But ever since then, they have been accumulating, and even through January, they're continuing to buy, like 400 Bitcoin here. I think a couple of days ago they bought another 600 Bitcoin. So there are, and by the way, their wallet now is bigger than MicroStrategy's.
He's the guy at the 127,000, isn't he?
Yeah, it's crazy. Yeah, whoever, I don't know who it is. I keep wondering, like, who is that?
So follow whale number 3, and when they sell, we sell. Thanks, Ben. Got it.
Right. Yeah. Basically, that's all you really need.
Awesome. And then lastly, and then we'll get out of here. The question is, how's the cough, James? Get well soon. If you guys don't know, James is under the weather, and
I am perfectly fine. There's a a proverbial frog in my throat, but he's alive and well. But everything is good.
Perfect.
To beat. So thank you for asking.
Guys, that is it. Just remember that when in doubt, zoom out. Time in the market is more important than timing the market. I want to thank Ben and James from InvestAnswers. You can find the link to their channels in the description. And that is it. Gents, thanks for coming on. I'll see you guys next week. I think we're at...
You should be on my channel.
Ben's channel. Perfect.
Yep.
All right.
Awesome.
Thanks, guys.
Thanks all.
Good. Bye.
See you. Bye.